This will be a quick video on debit spreads and how to use them, when to use them, how to set them up in ThinkOrSwim. A debit spread is a directional options trade that just simply costs you less money. Let's go look at one right now that I'm going to be setting up on Carvana. And a directional option is very simple. You buy a call. If the stock goes up, you make money, done and done. A debit spread is a way to leg into that exact same position, create a limited risk, and create a limited return strategy. The great news about debit spreads is it's pretty easy to create a spread for these bad boys. So an example on Carvana. You got a nice gap here. We coiled and traded sideways for a few weeks. We gapped up with a gap and go. We broke out the 200 simple moving average. We're above the daily 10, 20, and 50. We are above the weekly 10, 20, and 50. We have 1, 2, 3, 4, 5 bull candles in a row. But again, we are looking like we're breaking out a little bit here. And the monthly chart, we have room to go into the 10 EMA. Long-term moving averages, there's nothing on the weekly that is far away, and there's nothing on the monthly and the daily chart. We are just, again, breaking out. So we have some directional bias. We have an opportunity to have a little bit of a spike here. And obviously, we could just go directional call options. The downside with directional call options, of course, is that if it doesn't work, well, it gets smoked. You buy calls, you lose a certain percentage of those call options, and it really, really wrecks your day. What I'm going to do now is show you the math and the technical charts for a debit spread. So if I'm looking at August is a 78-day away debit spread. And looking at this particular position, I would like the out of the call to potentially go in the money. And I would like to usually buy an at or in the money call option. In this case on Carvana, around 12.50. If I pull up the option chain, I look at a 12.50 call, I could buy this call by itself for about $6. So if I buy 10, that's going to cost $6,000. The good news is that's my total available risk. If this goes to zero, if Carvana crashes, if this trade doesn't work, the absolute max I can lose is 6,000. And of course, you can place the stop loss, right? You can easily place the stop loss at $5, $4, $3 on the option itself and create a mathematical amount of how much money you're willing to lose. But I'm going to take it one step farther. What I'm going to do here in ThinkOrSwim is right click this, click on buy and go to vertical. Since I'm buying it, it'll automatically know what I'm trying to do, right? So buy and then click on vertical. It'll be green and it will pre-fill your call option strikes here. I'm going to go ahead and select 20 and I'm going to show you why in just a moment. $12.50 call and $20 call. Here is plus 10. This is minus 10. And here is the limit. This is obviously day and this is the actual price. Now $12.50 minus 20, $2.88. What does this mean? Well, 20 is here, $12.50 is here. And I would spend $2.80 on that option. Here's where it gets fun. 20 minus $12.50 equals a particular number. That number is $7.50. So this is the maximum amount of winning that is possible on this trade, $7.50. Now you're going to have to subtract the overall debit of $2.80. $2.80, $7.50 minus $2.80. And for easy numbers, we can make this a 5, and that would be $5. So $7.50, which is the difference between these two numbers, minus your debit of $2.50 is $5. And that's going to be your maximum return on this particular trade. The debit itself is going to cost $2.50. So I can set that up. I can just come in here, doing a $2.50 and doing good till cancel. Essentially hoping that it pulls back a little bit. Now, if my maximum cost is $2.50 and my maximum reward is 5, that is a 1-to-2 risk reward ratio. But what it does is it decreases the cost of the overall trade itself. If I get into this trade and at some point I want to buy to close this sold option, I would be able to. If I want to leave this particular trade on by itself, I would be able to. I can create this as a singular instrument by placing the trade as such. Boom, boom. And now you'll notice here it is, 2 trades together, waiting for the pullback. This is the price of the option that I'm buying. This is the price of the option that I'm selling. And those two numbers are going to create a debit, an overall cost on my account. So this is a cash trade. You cannot do this particular trade on margin. It does require cash overall. Now, if Carvana pulls back a little bit, I believe this $2.50 will fill. So something like this, and then something like that will ensue. This allows me to capture an upside of about $5, which is a 1-to-2 risk reward ratio. This is decreasing my total cap loss from, if I just bought the option itself at $6 to now $2.50. So if an option gets really strange, something gets weird, and I need to hold on to it, now I know my maximum loss, I've just decreased it from $6 to $2.50, and I still have a nice upside potential. If Carvana goes all the way up till 35, let's say on this particular trade, my maximum gain on this position is going to be 5, which is the difference between these two numbers minus the overall debit on the trade itself. Your profits will be capped, but your entry on the actual position itself was also decreased overall. It's a fun strategy, and oftentimes I use this particular strategy on a position that I think is going to break out. It looks like it's going to break out. It looks like it's going to move, but the overall trend is still kind of bearish, because if this particular trade does something like this, where it breaks out, pops, trades sideways for a little bit, what I can do is buy to close the $20 sold call. And when I buy to close the $20 sold call, that will now remove my upside cappage from the overall trade, so that if Carvana does this and starts really rocket shipping up 2, 3, 4, 5 weeks later, if that occurs, now I just have my long call. And the sold call helped decrease my initial debit on the actual trade itself. Super cool trade, super fun little strategy. And if you pop over to a website called reallifetrading.com and you come over here to blog and you type in the word debit spread, you actually get some more written information if you are more of a reader when it comes to trade. So debit spread, there it is. February 26th, 2020. Feel free to click on it, walk through it, read it if you like written information. Otherwise, team, thanks so much for watching this video. You rock. And until next time, love life, and trade it. Bye.